Good day, ladies and gentlemen. So today is Saturday, the second day of March 2024. I want to quickly give you an analysis of this particular week, okay, starting from Monday to Friday. Okay, today is Saturday, so Forex does not trade on Saturday. So I'm analyzing Monday, 26th of February 2024 to Friday, 1st of March 2024. Okay, so Monday to Friday is what I want to analyze, and I'm doing this analysis using the GBPUSD killer strategy that I taught you. Okay, so if you have not watched that video, please go and watch it. Okay, I think the title is Powerful Forex Trading Strategy, something like that. So just check my check my videos for that particular video where I talked about the GBPUSD killer. Okay, so based on this strategy, you use the previous day's high and low. So you have to mark out the previous day high and low. So if you watch that video, you know this is going to be Sunday. Okay, this is what happened on Sunday, so this part is Monday. All right, so I'll mark out the lowest points of Monday. Remember, we use the body, we don't use the week. So that's the lowest points, lowest level for Monday, while the highest level for Monday is somewhere here. Let me balance that. Okay, that's the highest level for Monday. We don't trade on Monday. Okay, so on Tuesday we wait for either the high of Monday to get broken or the low of Monday to get broken for us to apply our strategy. And based on what I can see here, you know, the high was not broken, neither was the low broken. Okay, so what's that implies is that you won't be taking a trade on Tuesday. So the next thing for you to do is to readjust the high and low. Okay, so you move the lines in order to place them on the high of Tuesday and the low of Tuesday. So I think this is the highest point for Tuesday. Okay, and this is the lowest point for Tuesday. Then you move on to Wednesday to see what's going to happen. So on Wednesday, based on what I can see here, okay, the lower parts of the horizontal line got broken. Okay, so that means the low of Tuesday was broken on Wednesday, right here. I think I have to zoom that in a bit, just a bit, so you can see. So you can see the candle that broke that low. This candle broke the low. So what do? We wait for another candle to come and pierce that level, not just retest it. It has to go beyond it a bit. That's why I call it piercing. So we wait for another candle to come and pierce. There is a candle that tried to do that but did not achieve it. This is it. It came to try to retest and pierce, but it did not. Okay, so you know the strategy. Once it's the candle pierces it, we place a pending order. Okay, we place a pending order below it. So that did not pierce it, so we have to wait and see which one is actually going to pierce it. All right, so this particular candle pierced it, as you can see right here. This particular candle pierced that level. So for the next thing to do is to place a sell stop order, okay, just below that candle that pierced it. All right, in order for the market to go down. So we place a sell stop order for the market to go down, and you can see what happened. We had a downwards movement, so we would have made money with this. Okay, so we had a downward movement, as you can see right here. Starting from here, your trade would have been activated here and price moved down. Okay, you would have made some money with that. Okay, as for where to place your stop loss, ideally you are supposed to place your stop loss somewhere here, but it's going to give you a very big stop loss, okay, at the swing high here, but that will give you a very big stop loss. So what I would have done is, in a case like this, I would have placed my stop loss just maybe 1 pip or 2 pips above this other candle here, like this, because ordinarily price is not supposed to swing back to that point. Then, you know, I'll just take probably a 1-to-1. I think it gave me a 1-to-1 here, 1-to-1 risk to reward ratio. A quick tip I want to give you is, if your stop loss is kind of big, okay, just go for 1-to-1. That's one thing I tell people, and I'm telling you this as someone who is more experienced. Okay, if your stop loss is big, go for 1-to-1. it doesn't make sense that you have probably a 30 pips stop loss, or let's say 35 pips stop loss, and you're trying to do 1 to 2. How are you sure you're going to get 70 pips? Okay, it's understandable if you have probably a 15 pips stop loss and you're going for 1 to 2 or 1 to 3. It's still a little bit reasonable, but don't have a 40 pips stop loss and you're going for 1 to 2. Okay, you are not certain to get to 80 pips. It can get to 50 pips, come back and hit your stop loss. So what are you going to do? So you have to be smart. This is a game for smart people. So what do you do? Monday, Tuesday, Wednesday, we took a trade on Wednesday. It paid us, so we have to mark out the high and low of Wednesday. Okay, so let me move all of this away so I can use the blue line to depict the high and low of Wednesday. So this is the low of Wednesday. Bring this together so I see what I'm doing. I think this is the highest point for Wednesday up here. Okay, that's the highest point for Wednesday, and the lowest point of Wednesday is right here marked out. So let's see what happened on Thursday. So I've moved to Thursday. This is Thursday. On Thursday, the low got broken. Let me zoom in. Okay, so on Thursday the lower part got broken. Okay, Wednesday's low got broken on Thursday, as you can see. So let's get that. I'm trying to point out this particular candle. So you can see this candle broke the lower parts of Wednesday's low. So the market is definitely going down. What do? We wait for a retest. Not just a retest, it has to pierce. Okay, it has to pierce. And we have candles doing that for us right here. Okay, so let me move this down a bit. And yeah, so look at this blue candle pierced the level. So ordinarily what you would have done here is to come and place your sell stop just below that blue candle. But guess what, another candle still pierced it. So what you need to know about this is, when you have a situation like this, move your sell stop to a few pips below the next candle that pierced it. We want the latest candle that pierced it. That's what we are going to be using. Okay, so this is an extra info that I'm giving you. Don't come and leave your this thing here. You can see you are already far away. You want to move closer to the level that the candles are piercing. So since another one pierced it, you can move this one here. You can move your sell stop here. Another candle still pierced it again. You can move your sell stop up closer to the candle like this, maybe 1 or 2 pips just below that last candle that pierced it. Then what happened? You can place your stop loss definitely somewhere around here. You can do this, place your stop loss here, go for 1 to 1.5 or so, and you can see what happened. Price moved in the downward direction. Okay, price moved down. Definitely your trade would have been triggered somewhere here, and this big ugly candle would have made you some money. Okay, so this strategy is very, very powerful. So let me move all of this away. If you're getting any value, please subscribe, turn on the notification bell. You got a question, feel free to ask me. I'm going to give you a response. So now this is Thursday. I want to mark out the high and low of Thursday. I've been paid for Thursday, so let's mark out the high and low for Thursday. So this is the low for Thursday, and let me see, is that the highest point? Yeah, so this is the highest points for Thursday, these parts. So let's see what happened on Friday. Okay, the lower parts got mitigated on Friday. Okay, so Thursday's low got mitigated on Friday. Okay, and we wait for a candle to go and pierce that level again. The next candle that followed went to pierce the level immediately. So if you are following my instruction, it means you have to come and place your place your sell stop just below this blue candle, since it's the blue candle that pierced the level again. And guess what, your trade wouldn't have been triggered. That's one good thing about this strategy. When you are wrong, you don't pay the price for being wrong. Okay, you rarely pay the price for being wrong. all right, because the price for being wrong is for you to lose money, but the price for being wrong with this strategy most times is that your trade will not be triggered. So this analysis now is wrong. The market wants to move up, but based on the strategy, we place a pending order for the market to move down, and guess what, the market just continued moving up. It didn't come down to trigger anything, okay, since it wasn't intending to actually go in the downwards direction. So if you are wrong most times with this strategy, you're not going to pay the price for being wrong. Instead, your trade will not be triggered. So you just go there, check, oh, market actually wants to move up, I thought it will move down. Just close your pending orders and you are good for the day. You wait for another day to trade. All right, if you got any value, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.